Hey, what's up, everybody? It looks like the U.S. Mint is having a hard time keeping up with that silver and gold bullion demand. You guys are buying it all up, and the U.S. Mint is having a hard time keeping up with that silver and gold demand. But we are going to take a look at this article and see what they are talking about. We are looking at numismaticnews.net, and this article is by Patrick A. Heller, and I will link this article in the description below so you can go ahead and check this article out for yourself. I'm going to give you my opinion on the whole thing. What we are looking at here is a beautiful 2021 American Gold Eagle. Stunner. This article was sent to me by Silver Honda, who drives a blue Honda, who slurps that Walmart Great Value coffee. So thank you for Silver Honda for sending this to me. So let's check out this article. It says in the year 2018, the U.S. Mint sold 245,500 ounces of gold among their four sizes. Think about that. In March right now of 2021, the U.S. Mint, I believe, is close to selling 400,000 of just the 1 ounce size in just 3 months of 2021. And I've done videos on that, and I've done videos on this where in 2018, 2017, to a lesser degree, 2019, the U.S. Mint had, or not just the U.S. Mint, but silver and gold, very low demand in general. Very low demand. Silver was at its all-time best pricing when it came to buying American Silver Eagles, American Gold Eagles, anything silver and gold. That was the best time to be adding to your stack. I've done videos on that, back then. And I was buying like it was nobody's business back in 2017 and 2018. Those were some fun times. In 2019, sales of these four coins fell to 152,000 ounces. With the surge in gold prices last year, sales rose to 844,000 ounces. It's crazy how that happens, right? Silver and gold prices go higher and they sell more ounces. Crazy. I did a video on that too. Why do people not want to buy silver at $15 an ounce in 2018, but yet they will buy silver at $40 an ounce in mass quantities in 2020 and 2021? Great example right there. They can't keep silver on the shelf, and silver is at near record highs with the premiums. Through Tuesday this week, the Mint's year-to-date sales of these Gold Eagles were 387,500 ounces. That's what I was just saying. Close to that 400,000. Now that's including all four of the Gold Eagle sizes. Close to 400,000. The news was similar for the bullion priced Silver Eagle dollar. Mint sales in 2018 totaled 15,700,000. Another 14,863,500 in 2019. Jumped to 30,089,500 in 2020 and was at 10,288,500 in 2021 year to date as of Tuesday this week, March 16, 2021. The U.S. Mint thus far in 2021 has been unable to produce sufficient gold and silver eagles to meet continued strong public demand. Retailers are now often quoting delivery days as much as 3 to 4 weeks after payment, or have often been forced to stop selling these coins altogether. Now, let me say something about that just for a moment. And I agree with this because if you go look at a number of the online dealers, and if you want to buy fractional gold, American Gold Eagles from 2021 or any other date for that matter, a lot of them is showing not in stock. It's not showing pre-order, pre-sales, or anything of the sort. It is, a lot of them are saying out of stock and you can't order them. I was in my local coin shop just a couple of days ago and I was speaking about this in a video just yesterday where my local coin shop had almost no gold. They had one 1/10 ounce American Gold Eagle from 2016 and that was it. They had quite a bit of silver. I'm not sure how much they were stocked up on American Silver Eagles, but in their display case, they had a lot of Perth Mint silver, a lot of Canadian silver, a lot of British silver, but they had very little to no gold. It was quite eye-opening as far as the gold aspect when I was in my local coin shop. At the same time, private and gold silver manufacturers are ramping up production levels, partly because they are able to pay prices for physical metals higher than the paper market spot prices and pass along these higher prices to customers. Gold and silver American Eagle sales in 2021 would have been much higher had the U.S. Mint complied with Federal Statute 31 U.S. Code 5111A1 states, the Secretary of Treasury shall mint and issue coins described in Section 5112 of this title in amounts the Secretary decides are necessary to meet the need of the United States. 31 U.S. Code 5112E states, notwithstanding any other provision of law, the Secretary shall mint and issue in qualities and quantities that the Secretary determines are sufficient to meet public demand coins, which one are 40.6 millimeters in diameter and weight 31.103 grams, 2 contains 3/9 fine silver, 3 have a design A symbolic of liberty on the obverse side and B of a eagle on the reverse side. Therefore, in order to comply with these statutory requirements, the use of the term shall instead of may means the U.S. Mint should now be striking greater quantities of gold and silver eagles. As we have been informed by the U.S. Mint's primary distributors called authorized purchasers, the Mint has not been able to further ramp up production of gold and silver American Eagles because it has not been able to acquire sufficient metal to do so. Interesting. The global shortage of physical gold and silver inventories have been rampant for more than a year now. When shortages persist for such a long time, the free market reaction would be for prices to increase indeed. Gold and silver prices have increased over the past year. From March 19, 2020 through March 16, 2020, the closing COMEX gold prices rose 17.7% from 1,470 to 1,730. From March 18, 2020 through March 15, 2020, the COMEX silver close jumped 121.2% from $11.74 to $25.97. Despite these impressive price gains, the shortages of physical gold and silver have persisted. That signals that gold and silver prices for physical metals should be even higher than the spot price reflects by trading in the paper markets such as the New York COMEX or the London Bullion Market Association. As current buyers of physical gold and silver products are aware, these products today cost much higher premiums above the paper market spot prices than in normal markets. In 31 U.S. Code 5112F1, the statute requires that the Secretary shall sell the coins minted under subsection E, silver eagles, to the public at a price equal to the market value of bullion at the time of sales, plus cost of minting, marketing, and distributing such coins, including labor, materials, dyes, use of machinery, and promotional and overhead expenses. A similar statute applies to prices of the gold American Eagles. Consequently, the mint could theoretically offer to pay a price higher than the paper market spot price to acquire sufficient physical gold and silver inventories to ramp up production to meet public demand. That is what the private fabricators of gold and silver are now doing to obtain the metal needed to fill the surge in orders they are receiving, which effectively reduces inventory for the mint to acquire. Unfortunately, other statutes prohibit the U.S. Mint from offering to pay prices higher than established by the paper market spot price. In 31 U.S. Code 5116A3 states the part, the Secretary shall not pay more than the average world price for gold. 31 U.S. Code 5116B2 states the part, the Secretary shall not pay more than the average world price for silver under any circumstances. Under any circumstances. Very interesting. As used in the paragraph, the term average world price means the price determined by the widely recognized commodity exchange at the time the silver is obtained by the Secretary. The widely recognized commodity exchange spot price that the U.S. Mint uses to purchase and sell gold and silver in the London Bullion Market Association, the world's largest commodity exchange for these metals. Effectively, the U.S. Mint is prevented from complying with the statutory requirement to produce silver and gold American Eagles sufficient to meet public demand by another statutory requirement that prohibits it from paying a price higher than the paper market spot price. Interesting. Technically, the U.S. Mint has one loophole where it could acquire more gold inventory. 31 U.S. Code 5116A3 elsewhere states, in the absence of availability supply such as gold at the average world price, the Secretary may use gold from reserves held by the United States to mint the coinage issued under Section 5112(1) of this title. I suspect the reason that this is not happening is that the Treasury Department does not want to report that its gold reserves are declining, an action which would have a negative impact on the value of the U.S. dollar. Interesting. Could the statute be changed to allow the U.S. Mint to purchase physical gold and silver at prices above paper market spot price? Yes, however, I very much doubt that would ever be considered by the U.S. government. The federal government has a strong interest in holding down gold and silver prices as a major tactic to minimize the interest rate it pays on its almost $30 trillion of debt. This concern would almost certainly override any consideration of allowing the U.S. Mint the flexibility to acquire sufficient gold and silver inventory to meet public demand. Very interesting. article. Let me know what you guys think in the comments section below. This is a lot to wrap around one's brain. And so on one hand, the U.S. Mint has to meet public demand. On the other hand, they can't meet public demand. And then they could meet public demand if they tap into the reserves, but there's a possibility that they don't want to tap into the reserves because are the reserves actually there? Very interesting. Let me know what your thoughts are in the comment section below. Appreciate everybody for watching. Please like, comment, and subscribe, and I'll talk to everybody on my next video. Thanks a lot, everyone.